Hi guys, Ken Chigbo, aka KenFX Freak, back with another week roundup and look ahead to the key events. Main thing I really want to talk about is dollar. Okay, so last week the real highlight of the week in terms of economic events was the FOMC rate decision. Now, just put it in a nutshell, they were dovish. Okay, the main real takeaway was just the fact that markets were hoping, given the fiscal stimulus that's coming in play, given the rising bond yields and fears of inflation rising, that the FOMC acts faster in terms of raising interest rates, try and cool, growth, cool inflation. However, they essentially, with their dot plot, if you look at a dot plot, that shows expectation of where interest rates, how members feel about where interest rates are going, essentially, okay? Just give us an indication, essentially. And that still shows that rates are going to be on hold, at these record lows until through past sort of 2023. So dovish. So dollar took a hit on that just because there were some outside hopes that they'd be a bit more hawkish with that. However, not being the case. But that's nothing new. But still, the dollar was hit. You can see here, let's just bring it on a lower time frame, on a 4 hour. All this selling pressure, big rejection here anyway at 92, sort of double O dollar index, breaking out of this range, big flush of downside pressure, but we bounced. Remember this sort of 91.50 area we spoke about before. Held, we formed a bit of a double bottom, what you could view there, one bottom, two bottom, our neckline up here at 92.00. So look, all of this moves that we're observing at the moment is still about a dollar correction. Dollar obviously underwent a huge beating in the back end of 2020 on the improved economic outlook as economies reopened. We didn't need the safe haven of the dollar. So it took a real big beating, especially with all the flooding of QE from the FOMC, the central bank, huge, unlimited amounts, as they say. So what are we observing technically then? You can see again, we've spoken about this already. We had a breakout of 91.50, a retest. It's held successfully despite that dovish FOMC as well. The bulls are hungry. We're trying to break down this sort of 92 area. Okay, look left with me here. Remember back in 2018, if we can break that retest, boy, are we going to have room to continue to recover. So that's just where we're at the moment. Very key structural area here, which, it's, as long as I don't have a crystal ball, but if that's broken, then I believe we'll continue to see that, obviously, that dollar upside. I'd like to see that. It makes sense. Just a needed technical correction. At the end of the day, the US is coming at a more equilibrium with all the other economies. Why should the US be falling behind? Vaccines are going out, data's improving there or thereabouts. Retail sales last week, not great, but the economy's moving in the right direction, especially with Biden's fiscal stimulus. Now, euro dollar, been flirting around this 119 mark for a little while now. You can see via the daily, got a bit of a narrowing sort of triangular pennant structure here. Personally, I'd still like to see it coming all the way down sub 117, down towards sort of 116.50. Quite a key sort of monthly and weekly area down here. Gold prices, a bit mixed feelings around gold. If you look on the weekly, obviously we finished again in the green. Got this huge area up here around sort of 1765, where I'd like to see how the price responds to that. Ideally, some rejections up here. Okay, potential short area in my view, but that's just purely technical, nothing to really know there. GBP also narrowing sort of structure. Obviously, we had this huge pumping to the upside, UK winning the vaccine race, but now we just got to see some technical correction. It's massive. Look at this run to the north. It's incredible. So now we're just cooling. Perhaps we get a pull back right down towards 135.00, perhaps a retest of our, remember we were talking about this for a long time, left shoulder, head, right shoulder, inverse head and shoulder structure. Maybe we come right back down to there, that big area here, before extending to the north. Same with sort of AUD, NZD. These are two as commodity-linked currencies. Cooling. Watch out for this trend line of support. Potential left shoulder, head, right shoulder structure. NZD, remember last week we went over this. We broke out of a key long-running ascending trend line. It's been in place since December. Breakout retest. We had two rejections there, forming a bit of a secondary flag here. Again, would like to see that pushing to the south. US stocks also running out of ground there, sort of marked up. You can see on the weekly, we formed what we could look at as a potential sort of morning star, evening star appearing at the top of the trend, or shooting star, come back down to, if we look just along this dotted line, our next key sort of weekly area around this mid 31,000 area, that would be quite some pullback. That's 1,000 points. But again, needed correction. We've just been pumping. Man, we can't just be one directional. We've got to see these pullbacks, these respective pullbacks. So that's what I'd like to see. I think this week for me, more so just technical, nothing fundamental, drastic to note as such. In terms of this week, look out for PMIs from Europe. manufacturing PMIs. We've got Fed's Powell speaking again, the chair. He's testifying. So look out for any comments on the economy and monetary policy. Perhaps he can clarify a little bit, shed some more light on the back of the FOMC rate decision. So do expect some potential volatility there, as everyone always looking for clues. Other than that, guys, look, do not hesitate to check out freakfxtrading.com. That's freakfxtrading.com for all your fundamental and technical analysis needs, trade ideas. Be educated by myself over a decade in this market. So not hesitate to check us out and get involved with our community. And BluFX, wonderful solution. As I always say, I have to keep saying it because there isn't much out there like this that's going to help you grow. And that's not a conflict of interest for the trader, which is you. This is in your best interest. It's in BluFX's best interest that you grow, and they produce some good traders. So do not hesitate. Other than that, let's have an amazing week. Let's get it.